Let's talk about term insurance, the go-to for many because it's simple, cheap, and easy. But here's the truth. What you don't know about term could be draining your wallet and leaving your family exposed later on. Today, we're busting the biggest myths that cost people money year after year, millions and millions of dollars, and showing you smarter ways to protect your future. Please pay attention and take good notes. Number one, term is always cheaper. Initial versus long-term cost. Term premiums start low but increase dramatically once you get past the term limit. And to keep it, it's going to cost a lot of money to the tune when you prepay your death benefit. Cumulative expense. Over decades, renewing term policies can cost more than a permanent policy itself. And it's like renting forever. You never get to build equity. The closing costs keep rising. Sometimes owning makes more financial sense. But the real question is, how do you get to that ownership? Stay tuned for the rest of the video because we're going to show you how to do that. So number two, a lot of folks like to say this after they buy the coverage. I'll just renew it when it expires. Let's say you're 35 years old and yeah, it's going to expire when you're 55, but you say at 39, I'm going to renew it. But now all of a sudden you're 55 and guess what? Your health changed. So sometimes when you have the thought renewing later may require another medical exam, health issues can be a difference, and you could flat out get denied on a new policy. And that would be the worst thing you could hear when you're 55 years old with 3 or 4 or 5 kids. So the age factor does matter. The older you get, the more out of pocket it's going to cost you in term insurance as a starting point. For example, if you're 30 or if you're 20, your term may be $50 a month. That same death benefit when you're 50 may be $200, $300, $400 a month. So relying on the future when it comes to your health is gambling with insurability on your budget. So just remember, one of the things that's important when you buy insurance, right? And we always say cash flow analysis, figure out a savings goal, whatever that number is. Make sure if you're going to buy insurance, you have whole life or even IUL, but blend term in there so you can convert it over time. That would be the smart thing to do, at least in my opinion. Number three, oh my God, I hear this all the time. I don't need coverage after 20 years. I don't even know how people could say that. Life is unpredictable. Financial responsibilities extend beyond planned timelines. Who plans these timelines? Coverage gaps, outliving your term can leave you without protection when you need it the most. So it's important that you don't make these assumptions that can hurt you later on in life. Be very careful on the present version of you now. Think of the future and make sure you really I dot and T cross. So a lot of times, let me get into number 4. I don't like to believe in absolute in anything or generalization. So for example, term is the best for everyone. One size doesn't fit all. Term suits short-term needs, yes, but long-term financial planning, missed opportunities, ignoring other options can mean missing out on benefits like cash value growth. And watch this, folks. Right now, as I'm doing this video, the market between the tariff war that's happening has gone down from 45,000 to basically 39,000. And when you think about something, what if all your money was in that 401k and now you're in a distribution phase of retirement? Well, you just lost a little bit of money as you're taking distributions. There's nothing better in retirement when you have a whole bunch of tax-free cash value inside a whole life policy that didn't expire because it wasn't term insurance. So understand all that. It's important that you make those decisions the right way. Number 5, last but not least, I'll invest the difference. And there's so many times I've heard term and invest the difference. Well, where are you investing the difference? And are you doing it every month for 10, 20, 30 straight years? Discipline is required when you invest the difference. Few consistently invest the savings from lower term premiums. Market risks, investments can underperform, leaving you with less than expected because you're not thinking about fees, taxes, and lost opportunity cost. The buy, and this is a nursery rhyme, folks, the buy term and invest a different strategy has made an insurance carrier very wealthy. But in my opinion, those 5 million plus families who don't get to cash in on a death benefit because the term ran out and the difference was suspect at best, they were running east looking for a sunset, has created a lot of poverty in this country due to that nursery rhyme. So folks, number 6, and listen, I'm not making it about the Bloods and the Crips and term versus whole life, but really simple. If you look at a whole life policy, I just touched on it, you're building cash value year over year. When you get to retirement, you get to take it all out tax-free up to basis and then borrow beyond basis to maintain that tax-free status. And oh, by the way, from age 45 to 65, if you're building up cash value, you get to leverage it for other opportunities, aka become your own bank. Keep that in mind as you're making all these decisions at any given point in time on the importance from a Swiss Army knife standpoint, why the insurance in the middle of your overall planning is very important. So in closing, term insurance has its place, but believing these myths can cost you more than you think over time. Understanding the full picture is crucial to making informed decisions about your financial future, not mine or anybody else's. If you're ready to explore all your options and find a strategy that truly fits your life, click the link in the description to schedule a free one-on-one consultation with myself or one of my members here at Epic, and they're going to help you navigate the complexities and tailor a plan that aligns with your goals and objectives. If you found this helpful, please don't forget to like, share, and subscribe for more insights on building a secure financial future.